Lord Anurag Singh, he's managing partner at Ansid Capital, joining us this morning. Anurag, great having you. What are you making of the developments? Right, it's moving at, if at all I can call it, it's extremely volatile. And there are plenty of moves, which is causing some jitters, both in the bond market as well as in the way precious metals are currently being perceived. Even though equities, there's not been much of a move.
So, Harsh, I get the volatility part, but I think market broadly has moved on from this event. They've accounted for WTI crude price between 70 and 90 or 70 and 85. And as long as that stays the range, I think US market is not so worried about it. They've accounted for the fact that this might even actually force President Trump to loosen other things like tariffs and other trade barriers, right? Effectively, I think right now market is really moving with their idea that one, there is no chance of a full-scale war, which is a big relief. And economic sanctions will continue in the backside, and oil might be a little higher, but as long as it doesn't go beyond 85, that's an acceptable solution for the markets. Let's not also forget that it's not as much a crisis as it was on Feb 28th. Because much of the oil is also flowing through Hormuz through the dark fleet. So effectively a shortfall of 5 to 6 million barrels a day, I think is something that the market can really work with as of now.
Okay, Anurag, hi, morning. Some cues that we are going to be receiving later today from the US in terms of their PCE, which is the Fed's preferred gauge of inflation. You're also getting GDP numbers, and more importantly, Nvidia is going to be coming out with its earnings as well. How are you looking at these numbers? What are the expectations, and what could the trickle-down effect on Indian markets be?
So let's tackle Nvidia first. I think the market is already trying to price in the correction on Nvidia. The price usually now is hovering at 180 to 220 based on the, Nvidia always drops 5% on results because expectations are way too high. I think that should stay in that range. Everybody knows Nvidia is going to somewhere beat the numbers, but not by much. But I think that's the story of Nvidia. The market is already trying to price in. Believe it or not, Nvidia is at a PE of 30. It's on a forward basis. So it's as cheap as anything else. So it's not as much of a frenzy as was thought earlier, right? GDP numbers would be fine. There is huge data spending, 700 billion, 800 billion of data center spending happening in US. That's propelling the GDP by at least 2.5%. Add to that the normal growth. So US is really going all guns blazing actually on the GDP front. Inflation is contained. I've been taking this little contrarian positions right from 5-6 months ago. Inflation is contained because I don't see inflation in the wages. Everything else is temporary. And we see that coming up as well. You see, Fed is not going to take any action from the Jackson Hole meeting. And the next meeting happens to be just before the elections, midterm elections. No Fed chairman is going to raise rates before the elections. So I think all in all, inflation by that time already would be in control. So I'm pretty confident that Federal Reserve is out of sight and out of mind and is working in the background. By the way, that's exactly the idea of this Federal Reserve, that we should not share the limelight and we should not make the news. We should work in the background and enable the economy. That's exactly where we are, I think. So I feel very, very confident on all these metrics.
Anurag, again, I'll switch back to crude because the view is unique there. You believe that the shortfall is thin, and that can probably be bridged by the reserves that both the US, Japan, and some of the other sovereigns have. Just therefore trying to get a sense, this cool-off, well anticipated, further cool-off to be penciled in largely, and at what rate does it settle?
So Harsh, this crude thing is really beyond our pay grade for all of us, right? We just go by what the geopolitics experts and the energy experts have to say. Even they have no clue. But I think it is very evident if you see last 3 months, it's very, very evident that despite whatever threats, Iran has not been able to spike up crude price sustainably above 90, right? Which gives and the oil has begun to flow through the Hormuz with the help of Oman. So whether you like it or not, much to Iran's dismay, I think that that point is contained. I think you should not over. I understand emerging market like India is concerned on the price of oil, but I think Indian market has so many other things to worry about than oil. And oil might be an easy enemy to kill, but I think, trust me, there are much more areas of concern otherwise in the market. Energy is not what is holding up Indian markets. That's my belief.
What is, Anurag, what are the triggers?
Triggers for what markets?
For
Indian market
the Indian
or-
market. For the Indian market, which you were just speaking about.
So Indian market, I think the triggers are three. One, I think the lending, retail lending in India has touched levels of 45-46% as a percentage of GDP. That's reasonably high. Look at US, which is like 55-56%. So that's a significant retail lending for an unorganized market like India. That's pretty significant. Second is the kind of the regulatory action in India, almost on every front. The hyperactive regulators, I think that's that's hitting the markets as well, because you don't know which industry would be hit next. And finally, I think valuation continue to be driven by the mid and small cap flows, and which I'll give you an example. Hindustan Aeronautics is somewhere around 40 billion of valuation with just $3 billion of sales. Lockheed Martin, which is world's biggest arms company, has $75 billion of sales, is just valued at 140 billion. You can imagine the differential, right? One is valued at two times sales. One is valued at maybe like 30 times sales, 35 times sales. So that's the optimism being priced in. Can HAL become a Lockheed Martin tomorrow? Even then the price is too high. So I think that's the bigger risk, and nobody seems to be worried about it. People are comfortable buying.
What are you buying in the Indian market? I know that you too have an exposure. What is it that you're liking?
Only IT.
Only
large
IT.
cap IT.
Okay.
Only large cap IT. But by the way, and the private banks, which everybody hates.
Okay, excellent. Anurag, that sums it up.
And I was, by the way, I was very gung-ho on hospitals, but I've sold it all. There's way too crazy for my taste.
Understood.
I mean, the price, yeah, the value has really gone over the roof, and I don't think it's just sustainable now. Yeah.
Large cap IT, private sector banks, selling in hospitals. That's the tilt that Anurag is playing. But thank you so much for joining us.
Yeah. Thank you.